All right, Taberne Talks. Here we go. Another episode, another weekend. We took a little break over the last few weeks, so if you missed me, I'm back. If you didn't miss me, I'm back anyway. So I wanted to, there's a lot of things that have been going on personally in my life, so that was the reason for the small hiatus. Unfortunate death in the family, which rocked my family pretty hard. So and I'm not going to get into that because I'm not going to make everybody, sad and all that stuff. I just want to let everybody know that, times right now is a tough world that we live in. And we, there's a lot of things that go on every day with stress and all that other things, but it doesn't add up to, you never know what's going to happen to you, and you never know when your last day may be, right? So, live it up every day, right? You live every day like it's your last day is what I have to say. And I sent out an email earlier in the week to all of my current realtor partners and clients and everybody that I deal with, and just basically let them know, don't stress out the small things. Keep plugging and stay positive and remember the big picture. And the big picture isn't just real estate, it's your life, right? So that's my 2 cents of the morning, but I want to get into the mortgage stuff, right? So, as the last 2 weeks I was off, the last guy I had on was Alex Frederick from the Mainline McCann team. Guy was sharp, was the rookie of the year. I think we got one of the highest views on the show as far as some of the clips that we put out. The reasoning for that is he closed, 17 deals in less than a year, which is amazing in this market. I'm glad that he agreed to come on. He's the kind of guy that we really wanted to get into. And I think, you're not going to find many of them, right? There's not many people that are killing it in this market, right? There's more that are not and less that are. So we're going to try to bring on more guys like that. I know I've been hitting you on DMs one-on-one to see if you guys want to come on the show. I do my research on who I think should come on the show. Because I just don't want to bring anybody on and bore anybody either. So if you get a message from me or something like that, you should feel honored, right? You should feel good. You should say, wow, I got a message from Alex and he wants me to come on the show. And that means he thinks that I'm a good realtor. He thinks that I'm a good professional. And, so say yes, right? Let's come on here. Let's talk to the people. Let's tell them what's going on in the market. Okay. So one of the first things that I wrote down this week that I wanted to bring to everyone's attention, because I'm just seeing a lot of it, is the mental instability of the business right now. So, write that down, the mental instability of the business right now. Okay. There's ways to combat the swings in income right now, the moods that are going in and out monthly. How to manage your wins and losses is not easy right now. There's more losses than wins is what I really see as we head into the third month of 2025, and we're in March. The mental instability is not something that is easy to navigate. I struggle with it every day. There's days that I come in that I feel great and I want to attack the world. And then there's days where I'll lose a deal or maybe even two, or I'll talk to colleagues of mine that are either on my team or work closely with me and they're having a hard time. They may lose some deals. They may not have anything in their pipeline. They may not be looking at a paycheck, in the next month or two because we're 100% commission. It's tough, right? How do I beat that is the question that a lot of people ask me. Like, how do you keep doing that? Like, that's a mental beating that you're putting yourself through every month, not knowing where the business is coming from and who's going to send it to me. And then how am I going to pay my bills if I don't have, deals coming in? That's called mental toughness, right? That's called discipline. And it's called hard work. There is no, I saw a thing on LinkedIn where a realtor put on there that, I come in and drink coffee and do whatever I want to do from 9 a.m. and then 3 p.m. I'm out playing shuffle hooky or whatever I'm doing, pickleball. And then at 6 o'clock, I'm out having a happy hour drink. That's not the way the business runs right now. Okay. You got to work hard. You got to get into the seat. Every guy that I've had here, not only Alex and previous people from him, they get in the driver's seat. They start calling people all day. They attack. They find different ways to keep themselves motivated. And if they have a bad week or a bad day, they don't let it break them. I don't let it break me. I'll go away from my computer, or I'll go into the office to see some of the loan officers, that see what they're doing, and maybe feed off of them, and find out, what's working. We're all in it together, man. We're not against each other. Collaboration is the key, I think, for 2025. I try to make friends with every single loan officer and every single realtor that I come in contact with. They might not like me, but I like them, right? And the reason why I do is because I feed off of them. I see what they're doing. They see what I'm doing. And I think that's a lot better than back in the day, like 2016, 17, and 15, loan officers used to trash and cut each other's throats and bash each other and, talk trash and make up rumors about people. That's not the way to do it in 2025. Now we're in such a small community. We lost so many loan officers that have gotten out of the business because they couldn't survive. So now you've got such a small community. You got to get along with everybody, right? And you got to collaborate, and you got to really step up and be a source of information, not a source of, I'm going to trash somebody because I think that I'm better than them. Okay. How I'm staying organized every day, right, is very tough. Like, I'll get up in the morning and I got to figure out how to stay organized that day, which is, I think, the key to success. Like, I could easily just sit at the computer all morning and stare at it, and then eat lunch, and then sit at the computer all afternoon and stare at it, and then go to dinner, and then I'm done for the day. That's not an organization. There's no goals there. There's no focus there. There's nothing. You're hoping that your phone's going to ring. Okay. You're hoping that, all day, I have so many past clients that my phone should just be ringing off the hook. That isn't, I'm learning that. It's not going to happen. Your phone will not ring all day just because you are who you are. You might be good, but you're not good if you're just in a shell, right? You got to come out. And I'm learning that, I'm making goals now every week. I'm trying to write down different offices that I'm going to visit or talk to people over the phone. I'm writing down how many deals I think I need to have, by the end of the month in order to achieve the income that I want to make. I'm focusing on the essential things that I think I need in order to make me successful. I'm no longer just winging it. I used to wing it. Like, I used to just say, hey, I'm Alex Taberne. I've been in the business 30 years. Who cares, man? Send me some deals. Come on. You know who I am? I can't. That's gone. Those days are gone. Like, if you're not really putting together a business plan or a goal set every week or every month, you're out. I talk to young loan officers, and they ask me, what should I do next? Hit another office, meet realtors, ask them to go out, tell them what programs we have. Myself, I went into the office yesterday, and I'm not going to name, every loan officer that I talked to, but I talked to a loan officer yesterday that gave me information on what products they're successful with and what they're doing to succeed right now. And I wrote it down, and that's me. Right? Because I want to know how they're succeeding, because I'm not doing as good as them. No one is doing better than the other. Everybody needs to learn from the other guy. So I learned from him. I went home. I put together a script. I sent it out to my personal agents about that product and program that he told me that he's having success with. And I want to see if it works. You got to take the advice. Can't think that you know everything. Okay. Have some goals. Set them every week. This is what we got to do. This is how many realtors we got to reach out to. This is how many past clients I think I should be hitting. These are scripts that I think I should be putting together. If you're not doing that, I don't even see me making it. Like, I get worried, and I try to just keep cool and strong. And my wife will say, "Oh, come on, Alex, you tell me every month you have a problem." And then no, it's the truth. This is a different animal that we're in right now. It's a different market that we're in. And you have to be able to figure out things and get the advice of other people to continue. So that's a big one. Where should I be going to get the business? My number one thing for the last 30 years to get business in the mortgage world was always to attack realtors, right? Realtors have been my bread and butter from day one. Okay. That's just me. I went through 3 different refinance booms. I went through the refinance boom of 2001. I went through a somewhat of a refinance boom in 2006 to 8 when everybody was doing anything that breathed. I went through another somewhat mini boom of 2012 and 13. I know a lot of people don't remember, but the rates did have a blip there, and we did some deals. And then I went through the the massive, colossal, biggest refi boom I've ever been through, which was a pandemic of 2020. Let me tell you something. I always stuck to working with realtors. I've always stuck to the purchase business. Okay. That was my niche. Okay. From day one. And a lot of guys were like, oh, you could just do refinances. No, you stick to the purchase business. But I'm learning in 2025, that is not enough. Okay. And that's tough for me to swallow. And I think that's tough for a lot of older guys like me to swallow. Like, it's easy for the younger guys to understand that. But guys like me and been in the business a long time, it's tougher for them to swallow. I went on a training call, with some of the loan officers in movement, and they're getting their business from financial advisors, accountants, attorneys, real estate attorneys, insurance agents, title reps. They're getting their business from everywhere. They're not just getting their business from realtors anymore. That opened my eyes, right? We got to do that, right? I got to step my game up. Like, and this is me talking to you guys out on there right now. Insurance agents, financial advisors, accountants, title reps, attorneys, go after more people. The more people that know you, the more opportunities you'll get to get deals. Okay. And the opportunities you'll get to brand your name and get things out there. I'm learning that, if I just stick with going after realtors, it's my fault that I'll fail because I didn't branch out and do anything else. Not that realtors are still not my bread and butter, because you guys are. But I'm learning that there are other avenues that our loan officers are having major success with, because the realtor industry is maybe not as strong as it was over the last few years because of low inventory and a lot of external things that are out of our control. So that's a big one there. That I think that you should make a list every week and say, this is who I'm going to go after this week, and come up with a script. And listen, if nobody responds to you, everybody says no to you that week, it doesn't mean you stop. It means you follow up 2 weeks later. You be a pest. I hate to say it, in sales, you have to be a pest. If you're not a pest and you're not following up, then you're not going to make it. And I learned that too, this year. I've learned so many things this year that I thought I knew so good over the last 25, 30 years. But I've learned the hard way. Like, the money's in the follow-up. The money's in the sources that you're getting business from. The money is in collaborating. Okay. So that's a big one. Okay. So I was getting text messages all week about the tariffs that are going on and how that is going to affect the mortgage world. This is my opinion, right? And solely my opinion. So, because there's a lot of political people that are probably watching this right now, and they're like, yeah, I know you have your opinion too. You're entitled to that. This is my opinion. The tariffs, Trump obviously went a little crazy this week and did all these tariffs. That's not my business, right? My business is mortgages and what's going on in the economy. Okay. How is it affecting mortgage rates is really the question that I've been getting. And rates came down pretty dramatically from the last month to where they are now. Okay. I was doing rates at 7.5, 7.25, and 7%. Over the last 2 weeks, I'm rates of 6.5, lows of 6.25 on FHAs and 6% on FHAs, conventional rates at 6.75, and even at 6.5. We really saw a big, the 10-year treasury come down pretty dramatically to where it was. And that helped us. Now, did it help the stock market? No. I mean, you saw one day that it crashed 1,000 points. You saw the next day that it crashed 500 points. You saw a lot of people getting laid off. They're doing layoffs left and right, and I think it's a scary situation that we're in. Right? They're doubling and tripling tariffs on different countries and things like that. It has helped us. Now, it hasn't helped us dramatically. Right? Rates aren't in the 4s or the 5s, but they did come down and it did help us. Over the last few days, you've seen the 10-year swing back and forth. You're going to see that. The inflation report came out. It really didn't help us too much. I think the Fed is due to speak next week. I think that will help us because I think they are going to map out some rate cuts coming up this year. I do think that. And I think that they are going to, we're teetering along a recession. And if that happens, obviously a recession is bad for the country, good for mortgage rates because that'll drive rates down. Okay. So I think the tariffs are overall a good thing for mortgage rates overall for the country and what's going on, I don't know. I'm 50-50 on that, but I think that we will see better times coming with mortgage rates. I think they will continue to come down. A lot of refinance opportunities coming out of nowhere. I made some notes on refinance opportunities that are coming out of nowhere. Many homeowners don't know how much equity they have in their properties right now. I've had people call me over the last week. I want to refi because I saw these rates come down to 6.25% and 6.5%. I got 7.5% or 7.25% 6 months ago, but they don't think they have enough equity. Or I have people that want to cash out refinance and they have no idea. They call me and say, "Wow, I think my house is only worth $250." We do a comp check with the appraiser to see what they think these properties are truly worth. They're way higher, and these people don't even know. You thought it was $250, it's $350. I mean, you got a ton of equity in your home. You could refinance and take cash out, no problem. You could get a home equity loan or a line of credit with us, no problem, because you have the equity that you didn't even know. Okay, get yourself out of debt. Clean up the credit cards. Clean up the high interest loans that you have, the high car payments that you have. Clean them up. Take the equity that you have, pay them off, get rid of them. Okay. If you can't swallow a 6.5% interest rate, but you can swallow a 25% credit card rate or a 20% car loan rate, something's wrong. Get rid of that. Use the equity that you have, pay them off, consolidate, and then you refi down the road when the rates come down. Okay. That is my spiel. And I know a lot of people don't agree with that. They're like, "Oh, well, why would I get rid of my 3% rate?" I get it. But you have a ton of debt. You can't buy anything. You want to buy a new house. I'm running credit reports every day. And there's so much debt that I'm seeing on the credit reports with people but they had the shot to refinance 6 months or a year ago before they were going to sell their house. They could have paid off all that debt so that when they did finally go to sell their house and we pulled their credit, they didn't have any debt because they paid it off with a refinance a year before. Clean yourself up. You have the equity. Believe me, you do. You just don't even know it. So I think that's the awareness needs to be more. Mortgage companies have to get in home buyers' heads more, or home owners' heads more, and let them know that there's a lot of equity out there in the properties that they're either selling, or for home buyers, you guys are buying properties you don't even know have built-in equity. Do you know how many appraisals we've done on houses that home buyers are buying and the appraisals came in higher? Guy bought signed a contract for a $300,000 house. We did an appraisal. It came in at $325,000. He has $25,000 of built-in equity he didn't even know about. That's happening a lot more than you know. So you gotta explore your options, right, and get yourself in order. So the refinance boom, I think we're gonna have mini booms through the year. You're gonna have mini bips like we had in September of last year. The rates go down for a few weeks and then they shoot up, and then they go down for a few weeks where you can refi really good, and then they shoot up. Like, you're gonna have those blips through the year. You're not gonna have a straight refi boom. It's just gonna be those different blips. Okay, so investment properties. Why do I think, first of all, the number one investment property product that we have right now, and I think in the whole mortgage business right now, is the DSCR program. DSCR is no income, they don't verify your income or anything. No income docs, no W-2. You could be self-employed, you don't show any money, fine. You have a job that you don't make a lot of money, fine. DSCR, will qualify you to buy this property with no income. Okay. And you can close fast, and the interest rates are great. What I wanted to point out is that a lot of people don't realize, listen, 20% down was the benchmark to put down for an investment property. But did you know that if you could just squeeze out 25% instead of 20%, your rate is going to be so much better if you could do 25% down versus 20% down? Okay. That is a big, I don't think people realize that. Like, they'll say, I got the 20% to put down. I tell them the interest rate, and the interest rate may be 8%. Okay. I price it out with 25% down at the same scenario. And that's extra 5% down got that rate from 8% almost down to 7%. So it cut a whole point off the rate, which is a significant difference on your monthly payment. So if you're going to go rent out that rental property, the investment property, you're trying to get as much cash flow as you can. If your payment is low and you have a 7% rate instead of an 8% rate, you're going to make more per month on your rental income that you're getting from that property, right? So why, if you have the money, why not put the extra 5% down, go from 20% down to 25% and get the better rate? Okay. It's a no-brainer. And a lot of people have the money. I think they just, they're listen, we're back from the 2001. Okay. I'm going to go 2001. That's how old I am. So 2001, I was doing investment properties with 5% down. Okay. People were doing 5% down investment properties, one after another after another. Okay. I liked it, right? It was a shooting fish in a barrel. Like, who couldn't buy a 5% down investment property? You bought 20 of them if you could. Okay. Problem is that you weren't getting that much bang for a buck because you only put 5% down. So your payment was $1,800 a month, let's say, with 5% down, versus if you would have put 20% down or 25% down, your payment would have been $1,200 a month. So you'd make an extra $600 or $700 a month on that rental income. That's where I'm trying to get with. Forget about 5% down now, right? And they don't do 5% down investments anymore. That's a dream. Now it's 15, 20, 25% down. But if you can put that extra 5% down and go 25% down, you're going to see it on your interest rate. You're going to see it on your payment. You're going to see all the way around positive income flow. It's a no-brainer. Okay. So this is my 2 cents on investment properties, as I'm seeing a lot more of them. And I'm seeing that DSCR products sneak up out of nowhere. Big time investors doing them. They don't want to verify income. They're self-employed. They have 10 investment properties that they own. They want to refinance them, but they don't want to show any income. Boom. DSCR all day. They have the 25% equity. The rates are 7% or 7.25%. It's a no-brainer. Okay. So, but I'm not quoting exact rates. If the CFPBA is watching right now, I know that I'm being watched. So we're not quoting exact rates, but I'm just, estimated. Okay. So anyway, another note that I made 3 years ago, it took 10 pre-approval applications to get 3 actual contracts to go under, for people to go under contract. So let me explain that. Okay. I did 10 pre-approvals a day, let's say. Okay. 10 people that called me to qualify to buy a house. Out of those 10, 3 of them would turn into actual people who made an offer on a house and went under contract. Okay. That was 3 years ago. It was easy. It was great. You'd get what's that? It's 3 a week, 6, 9, it's 12 a month. Okay. Just sit back. Hey man, want to buy a house? Great. Boom. Okay. The reason I'm bringing this up is now that it's double and for the same amount of contracts. So now you have to do 20 to 25 pre-approvals to get those 3 contracts. Okay. You got to work a lot harder, a lot smarter. You got to just work, right? You got to try to get as many it's double the effort now. Okay. For the same results. So I think this is the reason I'm bringing this up is the number one reason why this is happening is lack of inventory. Lack of inventory. There's no houses on the market, and the good houses that are on the market disappear in seconds. They're gone. We don't have enough housing to go around. Okay. A lack of inventory is the biggest issue. How do we fix this as a loan officer? If you come to me, how do I fix this? I do 20, 30 pre-approvals and I only get 3 contracts. I get 3 opportunities out of 30 to get a deal. That's tough. Okay. Because you did a lot of work to get the 30 pre-approvals or the 20 pre-approvals. Okay. Great rates. You got to have sharp rates. You got to have great interest rates right out the gate. Forget about playing the game anymore of, let me play with this guy and give him a little bit of a higher interest rate to see. No. Come out of the gate strong. Give him the lowest interest rate you can give him. Hook him right off the bat. Don't play any games anymore. Okay. Forget about it. I don't want to hear this stuff. I can get a little bit of a higher rate because I make more money. No, you're not going to make more money. You're going to lose the deal. Period. So out of the gate, great rates. Out of the gate, products. Okay. Got to have the products right off the bat. Guy comes to you, says he's self-employed, doesn't show any income, wants to buy an investment property, DSCR. Guy comes to you, says he's self-employed, doesn't show any income, wants to buy a primary residence, bank statement program. Okay. Guy comes to you and says, I have a problem with paying the first year. I want to see, do you have a program where I can get a lower rate on the first year? Interest rate buy down product. Got to have the products out of the gate. Okay. Guy comes to me, FHA, wants to see if he can finance it 3.5% into the loan. FHA movement boost, finances 3.5% into a second lien. The guy needs money towards his closing costs, finance more into the second lien. Products out of the gate, up front. Rates out of the gate, up front. That's the only way that these conversion numbers of the 20 and 30 pre-approvals that you're doing a week will go from 3 contracts to 6 contracts. I learned that the hard way. The reason why I'm learning that the hard way is because I'm doing so many pre-approvals, getting these credit pulls left and right. And what? Not getting any deals. The reason why I'm not getting any deals is because I'm not offering great rates like I should be off the bat. That's my fault. I got to get sharper, right? And you got to get sharper with your products out the gate. And now that I'm at movement, I feel a lot better. I'm in my 4th month now going on. I told a lot of the guys in the company I feel at home now that we're really coming on strong. So, but you got to be sharper out of the gun in order to see conversion numbers go up. I'm seeing conversion numbers that are way low because the lack of inventory. In order to get a shot at more people, you got to have more product. Okay, so that's a big one there. That of course I wanted to get out to you guys so you know what's going on. Best programs that are emerging in the market right now is the 0 down FHA loans, where the people are financing the 3.5%, into a second lien, so they don't have to have it out of pocket. State grant loans, where people are getting $15,000 and $20,000 towards their closing costs and down payment, so they don't need any money to go to closing with. 3% down conventional loans, where people have either a no PMI loan or a limited PMI loan with an awesome interest rate. No income verification investment properties, which I touched on. There's a number of game-changing products that are emerging in the market. Jumbo loans are coming back strong. People that are buying down the shore right now need outlets. They need loan officers to go to that'll offer them good rates on jumbo loans, right? Jumbo loan is once you get into the 8s, 9s, and $1 million properties that are down the shore, where you might see these $1 million properties on the main line. You need good rates and good products. And I think movement has stepped up on that end with the jumbo product, because we have a number of options to give to people. But I think that's an emerging market there. Okay, that you really have to tap into. Listen, the days of just offering 30-year fixed conventional and 30-year fixed FHA are gone. Okay, you can't you got to have more than just vanilla and chocolate, right? You got to have strawberry with the jimmies and you got to have all kinds of other different flavors. If you don't have all the flavors, you're out. I can't just be the guy in the corner now that just says chocolate and vanilla. It's not going to work. All right, that's not emerging anymore. People don't like that. All right, they want some jazz in it. They want the peanut butter cups inside the ice cream now. They want M&Ms and they want all kinds of junk in there, right? They want the good stuff. They want stuff that's different, that's emerging to them that they feel like that they can get. Okay, so all right. So how about this one? Buying leads versus client appreciation events. Okay, what is the better approach? And why? I had a realtor ask me that. They actually asked me that question point blank. So I wanted to make a note of that question. So buying leads. I do joint marketing with realtors on realtor.com. It's legal because we pay 50-50. I do joint marketing with realtors on Zillow. It's legal because we pay 50-50, right? That's the law of the land, is that everybody has to chip in. No one can just pay for that product. I'm not seeing much success at all with, you might get a deal here, a deal every 6 months out of it, maybe get lucky and get 2. A lot of the online leads are not serious people. They just clicked on a button. They like the house that they saw and they're like, oh, let me see this house. And then all of a sudden they get a mortgage guy calling them or a realtor calling them. And they're like, you know what, leave me alone. All right, I was just looking. It's like when you walk into a clothes store and the guy attacks you from the thing. You're turning around, running away from him. You're like, dude, I just wanted to see the clothes or the sneakers. I'm not into you talking to me, trying to sell me anything. And this is the online leads. They don't want to be. I mean, you might get one that actually wants to talk, but the majority of them don't even want you to talk to them. Or they'll say, hi, yeah, call me back at 2:00. And then you call them back at 2:00 and they never answer the phone again. They actually block you, so I'm starting to think that the online leads are definitely nowhere near the quality or not worth what they were even a year ago or 2 years ago. I think that the world has changed. If you're going to, establish your business off of online leads alone, you might be successful if you're dumping $10,000 or $20,000 a month. But if you're dumping 500 or $1,000 a month, it's going to be tough, very tough. Versus client appreciation events, I like. The reason why I like client appreciation events is because you get face to face with people. It's a good thing. Like you have it at a restaurant, you have it at a bar, you have it at a bowling alley, you have it in a movie theater, you have it wherever you want to have it, right? Or at a coffee shop. You're inviting clients that we've closed in the past, right? We're inviting current clients that are actively shopping with us that are looking for homes. We're inviting realtors that we want to work with, or insurance agents, or financial advisors, like getting back to different sources. You're inviting a lot of people to not only connect, but also to thank for them for giving you business or helping you succeed with your business. And they're thanking you for helping them succeed, right? It's a win-win for everybody. Client appreciation event is a no-brainer. I would rather put the money into that than put the money into. Now, client appreciation event is going to cost you more money, right? It's going to cost you $1,000 or $2,000 to put on a good event, with drinking and food and all that. But it's worth it. It's worth it, guys. It's worth it than to spend $1,000 or $1,500 on leads every month, which you're probably barely getting anything out of. But that one client appreciation event, you might meet a lawyer or a good financial advisor, or you might meet a past client whose family is buying a house now, or a past client who's looking to refinance. Somebody else's past client is looking to refinance. Like, you're going to get connections. You're going to walk out of there with business cards and phone numbers. It's worth it. If you work with me I'm your loan officer and I work with you as a realtor, I'm going to be reaching out to you because I think client appreciation events is where it's at. Going to an open house with your realtor and doing a joint open house and catering it. Getting food and drinks for the people who come into the open house. That's where I think it's heading. That's another event that you're looking to meet people face to face, one-on-one, versus just being a cold lead that somebody's calling through the phone off of a stupid internet ad that they just clicked the button by an accident. I met somebody face to face at an open house, said they wanted to buy that house. I did the pre-approval. I got them as a client on the spot. I didn't have to pay anything. The only thing I paid was I chipped in for donuts and coffee and stuff like that, which is a no-brainer. If you're not, like I preach this, and I think I preached this, on my last guest that was on here. You got to invest your own money in order to make money. If you're not investing on donuts and coffee in your own pocket, or you can't invest in taking out a couple of realtors to lunch, or a couple of clients that have worked with you in the past, or a couple of investors out of your own pocket, you're not made for this business. You got to invest your own money. The company's not always going to pay for it. So you got to invest your own money into doing that, because you got to think like, oh, you know what? If I do that, I'm probably going to get something out of it. And even if I don't get anything out of it, I know that I did it in order to show that realtor that down the road, I might get something out of it. Right. So, do that. The client appreciation events is a thumbs up. Buying leads, it's not as good as it used to be. Okay. So that's my opinion on that. Okay. So Rocket Mortgage bought Redfin this week. Okay. That was the big thing. Like, people are calling me, even my own family, saying, Alex, where are you going to work? Home Depot or Lowe's, or where are you going? Because you're going to be out of business. All right, man. You, where are you looking? I'm not looking anywhere. Okay. I've been in the mortgage business a long time. I've seen takeovers of company. Yes. Rocket Mortgage is huge. Okay. Redfin is huge. Rocket buying Redfin is big news. Okay. It shook up this industry this week. Every single post that I read from every influencer on LinkedIn and Facebook and the podcast that I listen to, all were talking about Rocket buying Redfin and what the implications are on the future of real estate and mortgages. And I'm going to tell you, I'm not worried. I'm not worried, because I'm just going to keep doing my thing that I do every day. I'm going to keep my head in in the front lines and just work hard and deal with the people that I deal with every day and find ways to find business. And if Rocket and Redfin are going to do their thing with, buying people from the minute that they look to buy a home all the way through the mortgage process and have their own realtors, and they're trying to do a monopoly, guys. It's a monopoly, right? It's a monopoly of the real estate mortgage world, where they want a one-stop shop from the minute that the person walks in to the minute that the person goes to closing, and even after, and retain them as a client. Great for them. They put billions of dollars into it. They got all the money in the world, right? So that's easy for them to make it a one-stop shop and try to corner a big piece of the market. What people aren't getting is that after doing this for so many years, I've always learned that people are always going to buy houses, and there's always business to go around as long as you're doing the work, okay? I'm not going to let that affect me. And I don't think you as a buyer out there, if you're buying a house right now, or you as a realtor out there, or you as a mortgage guy out there should be worried. Don't be worried, okay? That's only a part of the market. The market is huge. So there's other deals that are going to be done. Listen, people don't want to deal with robots, okay? They might like to go on the line and do the application online and let the computer do and all that. But I looked up a stat this week that 78% of people, if not more, still wanted that human touch in the process. They still want to talk to somebody. It's like when you call Comcast, you don't want to talk to the computer the whole time. You're trying to get somebody on the phone, they won't let you. Like you're pressing 0, you're pressing, you can't get to anybody. They put you in a round circle of computer, and you're getting annoyed because you got a problem with the TV, that the cable's not coming on and the computer's not sending the signal. It's not working. You got to talk to somebody in person. This is what I'm talking about. With a mortgage, you want to talk to somebody in person. You're always going to need that human touch. I don't care what Rocket and Redfin do to try to corner the market. Great. Good for you. Congratulations. But that's not going to stop me from doing my job and dealing with the people of Philadelphia and New Jersey and Delaware and wherever we do business at to say, hey, listen, go online and talk to the computer of Redfin and Rocket because I'm out of business. That's not happening. Stick to your guns. Work hard. Continue to work your sphere of people. Continue to build new relationships. Continue to get your face out there. Okay, so you lose a small share of business, possibly. You're not going to lose all your business. Okay, so I'm trying to stay positive there because it's a lot of people were freaking out this week saying, "Oh, this is the end of the end." I've been saying this for 5 years that we're all going to be out of business and everybody's going to be the computers are taking over. The computers may be taking over, but they're not taking over today, and I don't even think they're taking over next year. I don't think they're taking over in the next 5 years. I think they're expanding and making things easier for the consumer to buy a home. But I don't think that they're taking over where I'm going to be out of a job, because they're always going to need people like me on the street dealing with people face to face. People are always going to want to call me and say, you know what, Alex, that computer has no personality. It talks like a robot and it's giving me crazy information. Can you look it up and tell me? I'm the guy that can call the underwriter directly and speak to them. I'm the guy that can call the owner of the company and speak to them, not the computer. Okay, so don't worry. Like I said, congrats to Rocket and Redfin, but that's not going to sway me from, from doing that, being out of business anyway. If I'm out of business, then my wife's going to leave me, and then I get a whole problem. All right, so I don't know when I'm going to do that. Right, so I'm going to move on. Right, so. All right, so last one I got, because I feel like I just went on a rocket spear there myself of 10 things in a row. Why it's important to use the same loan officer you originally used to buy your home when you go to refinance. It's a good one. Listen, I'm in the business to work with people that I've worked with in the past. Right? I'm in the business for client retention. I'm in the business to work with people that I know. Okay. You come to me and buy a house, and then a year later, the rates go down dramatically. My job is to still let you know that I'm in the mortgage business, and use me when you go to refinance. My job is to follow up with you and stay active with you month to month with different things that are going on in the mortgage world. My job is to let you know when the rates do go down. But a lot of people just forget that you should try to go back to your loan officer that you originally dealt with, unless you had a problem with them, or they blew your deal up, or they were just not a good person, or the communication is stunk. That could happen, and that's the reason why you don't want to go back to them. But if you had an overall good experience, let's say, okay, you had a good experience with buying a house. It's a year later now, and the rates went down. Go back to the original guy that you originally bought the home with if you had a good experience. Why would you want to test the waters out on an online company that you don't know? Why would you want to test the waters out on a company that's in Texas when you live in South Philly? Just because they possibly gave you a lower interest rate, which you might not even be able to trust. Okay, go back to the guy that helps you in the beginning. That's how they live, right? So, and they have a better interest in heart to keep you as a client and client retention versus the guy in Texas or the guy online. They don't really have you best at heart because they don't know you to begin with. They've never dealt with you. They don't care. Okay, they're in it to make numbers here. The guy like us that are ultra local, hyper local is what I call it, living in your neighborhood, and I did your loan. I take care of everyone that comes back to me as best as I can. Okay, we do a lot. Waive this, try to give them a no cost refi, try to waive the appraisal, cut the title fees, try to give them a credit towards something. Make their process smoother when it comes to the application, make their process smoother when it comes to the documentation, try to move their loans quick, put them up in line because they're a retention client that's coming back to me. Go with the loan officer that you originally went with if you had a good experience the first time, is what I'm trying to say, because I'm seeing too many people that, they go to the online company and then they're like, this is terrible. And then they'll get in touch with the original loan officer. They said, you know what? I should have came back to you. You gave me a good experience in the first place. And now I went to the stupid company that was online and they just destroyed the whole deal, and the rate changed and they charged me a lot of fees I didn't know about, or they never got back to me, or it's 90 days or 120 days later. I never know when I'm going to close. No one's talking to me, versus you tell that to the guy that originally did your deal, and they're thinking to themselves, I could have closed you in 30 days. I could have gave you the same rate, if not better. I could have communicated with you and I would have taken care of you. That's the difference. So as we head into this market of refis coming up, which we will, you need to try to go back to the original guy that you had and see if you can get the best deal there. It'll be easier for you. Okay. And that's a big one. A pitfall that I see on doing online applications that people are doing. They go online, they fill out an application, they don't know what they make, right? They put the wrong income in on the application. They put the wrong employment verification in on the application. They put the wrong assets in. They don't know how to fill out an online application. A lot of these companies take online applications and there's errors all over the place and they don't verify anything. Okay. So please try to go back to the same guy, try to go back to the same company. Just don't deal with an online application. You're making errors all over the place. No one's verifying everything. It goes into a pool of 10,000, clients that want to refi and do all that stuff. And then they never verify and the deal winds up blowing up. So that's my 2 cents on that. That's all I got this week. I think we hit on a lot. I think that next week we have a guest coming on. I'm not going to name who it is because it seems like it changes every week. And then you guys play tricks on me. You say, yeah, I'm going to come on the show. And then all of a sudden somebody can't come on the show. And then another person hits me and says, yeah, I can come on the show. So I don't name names anymore because I get burned, but I have a few people that are saying they can come on. So we'll let them fight it out. And then I'll give you the name at the end of the week on my coming soon, clip that we do. But this week, keep rolling, keep your head up, keep positive. Market will get better. Work hard. If you're a loan officer, work hard. If you're a realtor, if you're a home buyer, get your pre-approval done up front, right? I've been preaching that. Try to get it as underwritten up front as much as you can. There's a lot of pitfalls there that I'm seeing. People just doing, and I'm going to leave you with this. There's a lot of companies that are just taking deals and doing them that I don't even know how they're doing. That just is scary to me. Like if we can't do a deal, which I never said I could do every single deal on the street. If you're a mortgage company out there that's saying, I can do every single deal on the street, I don't care what it looks like, it worries me. Like a person with a 580 credit score, fine, we can do it. But they don't show any income at all. They have no money in the bank, and a mortgage company is just saying, yeah, here's a commitment letter. That's a bomb to me waiting to happen. Like, you got to do your due diligence there. And those companies that are taking on these deals that shouldn't be done to begin with, I think will get burned, down the road. Maybe not right away, but it will come back and bite you down the road. And that's the companies that wind up going out of business. So just watch out. If someone's telling you, if 5 people are telling you no, it shouldn't be done, and 1 is telling you yes, it can be done, watch out, because that 1 yes could be a real problem for you down the road. Okay? Have a great week, a great weekend. We will see you next week, and keep rolling. All right? Thanks, guys.